Hey Al, how you doing, man? It is November 14th. We are really excited to bring a Thursday show. Al's going to the mountains. Al's going to the mountains. That's why he's got his flannel and his beard on, because he wants to blend in.
Blend in with the mountain folk.
Al and I are mortgage lenders. We love doing loans. It's how we make a living. It's how we feed our family. If you or anybody you know are interested in learning more about buying a house, refinancing a house, cash out refinance, rate and term refi, you buying a house to live in, investment property, bank statement loans, cash flow investment loans, government loans. You want it, we got it. We're here to help. We'd love to do that. It's why we do this. It's why we do this.
One-stop shop.
Also, if you are here and you're watching and you see what you like, maybe you like Al and I, you can wait to the end of the video and make your decision on whether or not we're worthy of your like and subscription. But if you make it to the end of the video, if you make it halfway through and you think, hey, these guys aren't half bad, why don't you hit the like, hit the subscribe button. It'll really help us out. It'll help us out a lot.
We want your business. We want your help. We want your business.
Anything to add to that, Alvin?
No, I think you nailed it. You know, we're here to facilitate folks that are looking to buy and refi.
Okay.
So, anything we can do, you let us know.
You gonna say anything about liking and subscribing?
And you should also, and I just thought of this and nobody told me to say it, you should like and subscribe.
I wish there was a way for me to point. Just like and subscribe button, Al.
And also, I think that you should like and subscribe if you can too. If it makes sense for you, then it makes sense for me.
You hold up a sign like, help me. Blink twice if you're being held captive. We're going to start the show off with talking about interest rates. What's your rate, Al?
Rates.
Let's talk about rates. So, as reported last week, we covered on our Friday show that the Federal Reserve went ahead with their highly anticipated 25 basis point rate cut. And we saw from the last Federal Reserve rate cut that lowering the Fed funds rate applies to just about every borrowing rate out there besides mortgages. Because after the last two rate cuts, what did rates do, Al?
Went up.
They went up.
Yeah, I mean, we went on here last week, and sometimes we're wrong. Sometimes we're flat out wrong. You give estimate, you think you know what's going to happen. Nobody knows what's going to happen. Nobody knows what's going to happen. So, yeah, in September, they said they were going to cut the rates by half, 50 basis points, and the market reacted and interest rates went down. And we thought that was going to happen this time, even though it was 25 basis points. We thought that once they announced it, rates were going to go down. And it looked like they were going to, and then now they just haven't. So
they haven't. Today's a little bright spot, but here's the fact of the matter is they're trending upward. I want to take a moment, since we're on the topic about the Fed fund rate, and just kind of give an idea of what it is, the most concise way I can. The federal funds rate is rate that the Federal Reserve sets at which banks lend each other money at. So if a bank needs to borrow money to meet its overnight balance, then they'll borrow from another bank. Interest that banks are charging one another to borrow money from each other. It's not like they're raising or lowering one particular rate when it comes to consumers, but you would think there'd be a trickle-down effect. If the banks are lending at lower interest and borrowing at lower interest, then it'll trickle down. Hopefully that happens sooner rather than later.
Definitely see an impact on your, on your consumer debts, your credit cards, your auto loans, personal loans, all that kind of stuff. That's where you're going to see the immediate impact. And then mortgage rates is a long game. You cross your fingers and you hope.
Yeah, big time. It is a long game, 30 years. So here we go. Next thing we want to get into, Fed-related, Fed-adjacent, is there's been some beef, Al. Been a little bit of beef out there.
You got some beef?
We got beef, and we're going to cover it because, we're a news show, we're a mortgage show, we're a couple of guys show, but, we're not going to shy away from some beef. So we got some beef between Jerome Powell, Federal Reserve Chair, and the President-elect Donald J. Trump. So I'm going to share something and show you. Where's the beef? All right, can you see?
I could say.
If he asked you to leave, would you go?
No.
Can you follow up on, do you think that legally you're not required to leave?
No. do you believe the president has the power to fire or demote you, and has the Fed determined the legality of a president demoting at will any of the other governors with leadership positions?
Not permitted under the law.
Not what?
Not permitted under the law.
Jerome
Jerome ain't taking no shit, but
Tell
you know
you
what
that
Jerome
much.
can do? He can shove it. He seemed a little pompous there, and nobody likes pompous. But if his job's at a threat,
Nobody likes pompous.
then I guess, sure, get upset about it. So Al, you watched the clip. There's speculation that Trump doesn't like Jerome Powell, or that he didn't like the way he handled things. Trump has been.
I don't think there's speculation. I think it's like he's made it very clear.
Yeah, they don't
He
like
does
each
not
other.
like- that he does not like Jerome Powell. Yeah. So
Yeah, he thinks they make all the wrong decisions. I heard him say, they're too late, they're too early, they just can't make the right decision. But shoot, I want you want your CEO to be critical of people.
Sure.
Yeah,
if you're not asking questions, then things aren't going to change. Things aren't going to get done, right? Is there a better way to go about it? Did we make some mistakes? If so, that's okay. How can we learn from it and do things a little bit differently in the future, right? Maybe, if we should have cut them sooner or whatever the case may be. But I think there definitely needs to be, and that tends to be an issue across the board just in politics now. There's no looking back like, hey guys, we messed up. We screwed up, and this is what we're going to do different next time. Regardless of who you like, that never ever happens. It's just like, I don't know what you're talking about. That didn't happen. Everything worked out great. Now we're going to keep moving forward.
it's called gaslighting. Very common these days. So we're going to continue with this beef, and we're going to follow this beef a little further. Let's get a little bit further in this beef. So
Where's
far
the
we've
beef?
So far we've got Trump's coming to office. He's making a bunch of decisions. He's outward facing. He's putting up videos. He's criticizing a lot of people, but particularly the Federal Reserve. So Jerome Powell puts out that "you can't fire me" thing, and then we've got Elon Musk chiming in. Elon's chiming in, and he tweets here, would be great to have Ron Paul as part of the Department of Government Efficiency. And Ron Paul tweets back, I'd be happy to talk about it, Elon. So who's Ron Paul? Well, if you don't know who Ron Paul is, he's been a forever critic of the Federal Reserve. In fact, he wrote a book called...
Did he write it?
End the Fed. So Ron Paul thinks that the Federal Reserve is unconstitutional. He thinks that monetary policy is unnecessary. And in one of his quotes that I read, he compared monetary policy to having baseball bat policy for a baseball game. So, that's as much as I can speak on that. I think it's pretty...
Yeah.
Our industry's front and center a lot of the time. So it's fun to look at and talk about.
It is fun to look at and talk about. And, depending on how deep you want to go, how far you want to go down this rabbit hole, I'm sure you'd like to talk about, what's your book, Ab? The Monster of Jekyll Island? Is that what it is? Huh?
The creature from Jekyll Island.
My kid's talking about monsters these days. He got monsters on the mind. Yeah, the creature from Jekyll Island. If you want to go a little bit further down, we look at all the people that perished on the Titanic and some of the wealthier people that were opposed to the Federal Reserve that just happened to be on Titanic when it sank. But maybe a show for another time, or a story for another show.
Yeah, I want to really be able to be concise and tell the story as I learn it, but. It's pretty jaw-dropping when you start to investigate the people who were behind the Federal Reserve at its conception, how it was conceived, the propaganda that was pushed to get bills passed, the players and who they were tied to. None of it is to look out for the people.
The American people. No.
It's just and if your team, big bank, or your team, big bureaucracy, and you don't work for the government, and you don't own a bank, you're on the wrong team. You need to get on a new team, because
you
it's
just
crazy.
need to research it a little bit more, because of course they're going to tell you that it works in your favor and that it's good for you, but the more you look into it, the more you realize that it's really not. You don't benefit at all. They benefit a lot from it. They make a lot of money, but somehow you keep making less and less. So, that's good stuff. I love that. I think we should dive into that a little bit deeper one day.
Yup. So,
So what does all this mean for interest rates? For the love of God, can we put a bow on this thing? Huh? We started off talking about interest rates, and now we're on the Titanic, and now we got to somehow wrap this thing back around to interest rates. So, what does it mean for interest rates? I don't know. I'm not a mortgage guy. So rates are pretty much, if you're looking at a conventional rate, you're hovering around the 7s right now. On a 30-year fixed, if you're looking at a government loan, you're probably looking low to mid 6s. There was a point in time there back in around September that we were there was a 5 in front of that number, wasn't there, Ab?
yeah, and things really picked up. Really picked up. So
all you folks that wanted to wait until after the election, even though me and Ab told you not to, it's a big told you so for us. But we're not going to rub it in your face. We're going to sit here and we're going to wait for your call, because we know it's going to happen.
I'm not the biggest fan of saying I told you so, but I don't think waiting is ever a good plan. So
I am very petty, so I told you so.
Let's get into a quick screen share here, and I'll give you some highlights. So this is a recent Market Watch article. Mortgage rates inch closer to 7% after Fed rate cut and Trump wins. So despite the recent Federal Reserve rate cut, rates have continued to rise. The average 30-year fixed mortgage rate, as Al just said, is approximately 7% as of the 12th. They're about the same today, if not incrementally better. Interest rates have gone up week over week now for 7 straight weeks. That's pretty jarring. That's a jarring one, and I didn't like reading that. I mean, we're living it, but to read it's another thing. No. And then this article here just goes over the rates and what's going on. And there was a quote in the article from Joel Kahn, who's the chief economist of the Mortgage Brokers Association. And here we go, right here. Mortgage rates have continued to increase last week, driven by higher Treasury yields and financial market digested the likely impacts of President Trump's presidency. The Federal Reserve's 25 basis point rate cut was already anticipated and did little to move markets. Applications, blah, 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 blah. So, I'm just kind of getting really tired of these canned responses. We're going to have to wait and see what happens with President Trump's blah, 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 blah. We're going to have to wait and see what the Federal Reserve does. We're going to have to wait. It's just like, just don't say anything. How about that?
Don't say anything. Yeah. Couldn't agree more. That's what the Fed did for the longest time in terms of doing, rate cuts. And now, we're just kind of waiting for what the impact's going to be. And they keep saying, they said it the last time, that that's already baked in. There was already, all any movement in the rates, it was already taken into consideration with the 25 basis point cut. So, yeah, I couldn't agree more, Ab. I just want some cold, hard facts, right? Don't throw in what ifs and all this nonsense. All this bull crap.
Hey, excuse me, Mr. Chief Economist. I don't think it takes a chief economist to let us know that you're going to have to see how President Trump's presidency, what decisions the presidency makes to see how the rates change.
Mm-hmm. I think you actually said that on a show maybe a couple weeks ago, and I'm 99% sure you are not a chief economist, although you do play one on a mortgage show.
Interest rates are up 7 weeks straight. Presidential election comes and goes. What's going on with mortgage applications? So, Investopedia. Let's see what they had to say. High mortgage rates since July didn't hold back home buyers. Highest mortgage rates since July. So rates are as high as they've been in 5 months.
Yep.
But despite high rates, mortgage demand ticked higher week over week. So we're trailing a week, but as we report these things, they don't It's not like on Friday we know the applications for that week. So last week, the week of the 8th, mortgage applications ticked up.
That's for the first time in 2 months. Before, back in September when we were
horrible.
Cooking. No,
horrible.
In September when the rates were low, we were cooking. Rates were rates were low, applications were picking up, and this is the first time that we've had week-over-week gains in 2 months.
In 2 months, right?
Yeah.
And it's coming off of we gave back. So to be specific, they were up not 1.9%, 2%. And this is coming off of last week, which is like one of the worst weeks in the last year. So like you give away 50%, you get back 2. Yeah, it's up week over week, but it still ain't pretty. Now, one thing that I thought was cool and to point out was that government loan programs like FHA and VA were the lion's share of the uptick. So you got to love the government loans, and I think, and I'd love to hear what you think, Al, but FHA and VA rates, they're lower than conventional, so there's that. But they also seem to be a little less sensitive to the news and to these market shifts. What do you think?
Yeah, they're veterans, for the love of God. They're not going to get shaken by a little bit of dust and dirt from markets. They stand tall. They stand ready. So that's why your government rates stay the same, right? Not moved much.
Yeah.
But yeah, I mean, they're lower. Obviously, that's the biggest thing. If you could do a VA loan, I think we've talked about it before. That's the best way to go. VA loans are fantastic for our veterans. You're going to get the best rate. You don't have mortgage insurance, things like that. You don't have to put anything down if you're buying a house. So, certainly some very obvious benefits there. But even in the FHA route, the mortgage insurance, depending on what you put down, it's not going to be that bad. And there's a lot of folks who qualify for a conventional loan that you offer the option of an FHA just because there's a savings there. People are so shaken by FHA, they think that it's a loan for a certain type of buyer or borrower, but that's just not the case. It's just another great option. It certainly is an option for folks that might not have as much to put down or have credit difficulties or what have you, but that's not always the case, and that's definitely a common misconception. So it doesn't surprise me that you're seeing these government loans pick up steam.
Yep. Well put, well said. And to your point, like even if you're qualifying for conventional or FHA, you have your pick. Yeah. There are instances where you could be a 780 credit score and just FHA just makes more sense if you're putting less than 20% down. The mortgage insurance is competitive with FHA versus conventional. So, good points. So that's kind of like what's going on with rates and mortgage applications. It's more stagnant. Like it's just kind of stagnant. We've been waiting.
Still water.
Yeah, it's just this the bottleneck is real, and it's a lot to do with first-time homebuyer challenges, which brings me into our next screen sharing segment here. So
don't tell me you're going to do another screen share. You got another one lined up for us?
So I want to show you this one. This one's fun. All right, so read this headline, Al.
The average home buyer is 56 years old this year, the oldest they've ever been. Holy smokes.
Pretty crazy, right?
Where's the young folk, right? Where's the dream of the, you're moving in with your wife and the house.
26 years old,
and you carry her in through the door, and you know what I mean? You come running back out with your arm around, you put the sold sign onto, like whatever happened to that? Now that person has back problems. Now that person can't carry their wife inside.
They're not carrying their wife through the threshold. Or, I don't know. It's sexist to carry the wife through the threshold now.
That's true. It could be sexist. Yeah. Or just because they're, I don't know.
It's progress. In the name of progress. So anyway, the proportion of first-time home buyers has declined to a 43-year low. Now constituting only 24% of the market. So only 24% of the market is first-time home buyers. The average age of home buyers is 56, as Al said, the highest on record, indicating that younger individuals are finding it increasingly difficult to enter the housing market. So, you know, what do you say about that? I mean, I could sit here and we could be poo-poo everything, and everything sucks and everything's glum and gloom. But I think perhaps that kind of talk is a contributing factor to why young people aren't buying the house. If they feel like they're behind the eight ball, whether it's true or not, if they've got this perception, then they're going to be less willing to try. And I would encourage anybody, whether or not you are paying attention to these stats, I would encourage anybody to take a shot. Take a shot at buying a house. Run the numbers, see how it works, and get your life going. Really get your life going. And you know what? Shit happens. You're not going to be able to plan perfectly for everything. So, home ownership is a big deal, and it's a direct line to wealth. That's my opinion. That's my op-ed on that article.
I love that. Now, anybody that knows me knows that I'm team glum and gloom. Ab told us not to be glum and gloom. I'm glum and gloom. That's who I am, right? Hi, I'm Al, glum and gloom. So, it sucks. It's tough. But to try to play the other side, so here's what I will say. There are some great programs, right, that we have access to, and some programs that have rolled out in the last couple of years because this has been such an issue to help the first-time home buyer get into a house. Says that, there's that, but I also think, and it's the toughest time in history, as far as like trying to save money. Obviously the cost of everything, the cost of buying a house itself, not even talking about saving the money to buy the house, but, to get qualified, and the cost of a house now is just astronomical. But I also think that part of this is this push. I mean, you have generational shifts, and the mentality of a generation. This generation is different than the mentality of the boomers or I don't even know what the Gen Y, Gen X, whatever. But anyway, you have a lot more people that want to rent that aren't as interested in buying a house, right? They don't want to be planted in one place. They want to be able to kind of pop around, whenever they want, or they just don't want the hassle of owning a home and dealing with that. So they'd rather rent. So I do think that's part of it as well. Yes, it's very hard to buy a house, right? Or not very hard. It's harder than it's been for a first-time home buyer. But as far as that, the numbers of only 24% of the market being first-time home buyers, I think part of that is that people aren't as interested in buying houses now.
Right.
So...
Yeah, I don't know how we could delve into this collective psyche of a society, but so I just want to tempt. So I want to psychoanalyze society.
This is exactly what I want. You're starting to you're squirming in your chair. I just want you to get real uncomfortable. I just want you to go on an unhinged rant about this society.
That's what I'm
kind of leading. I'm just throwing out breadcrumbs, trying to lead you there.
J.P. Morgan, Rothschild, they were all there.
Jekyll Island.
It's
all going to come out. He's just going to burst at the seams.
Senator Aldrich was a banker. He's a banker.
I can't. It's gonna happen. We're gonna have a great whole show about it.
Maybe we should do like a story time edition. If I make it home for Thanksgiving, maybe we should have a story time edition in front of a fireplace and two leather chairs. We'll both have the book with us, and we'll do a book report. I think that's
fantastic. I also would love to do a retelling of Oedipus, because I think you got a couple pieces wrong on that. But we can dive into that another time too.
Okay. I'll share that clip later. Anyway, so moving on from first-time home buyers and segueing into home ownership, and why maybe it might be worth taking the leap into home ownership, and that's home equity gains. So let's take a quick look at some home equity gains. All right, so here we go. Homeowners, I'll read it. Headline guy.
Homeowners have gained almost $150,000 in wealth over the past 5 years.
Mm-hmm.
It's a lot. 5 years.
Yeah, and New York Post is annoying, and like they've got all these pop-ups, and it's like, does anybody, like, what are you you're that freaking desperate? Like, enough of the pop-ups and
Hate the pop-ups. It's the
like,
worst.
all right, so we're just
bad.
not even gonna torture our
And
viewers.
he's already
with that.
losing it for the pop-ups. He is scoring. He's fired up.
So to sum up that, over the past 5 years, homeowners have gained an average of $147,000 in equity, equating to about $29,400 per year. It's a significant increase,
Yeah.
and it just shows. It's just values are going up. Sure, they went up big time after the pandemic, but they've continued to, and it's I just think it's important that people know. What homeowners are gaining and what there is to gain.
Well, I think that's part of the reason why we say don't wait, right? You're waiting for the rates to come down. You're missing out on that, right? You get in now. One of our good friends had made a great point yesterday about getting into Bitcoin, crypto, right? When it was at 60,000, he was like, I'm not going to buy it now. It's at the top. It couldn't go any higher. And then it's at 75. And he's like, okay, well now it's definitely topped out. I'm not going to get in on it now. Then it goes to 90,000. He's like, there's really no way it could go up any higher, right? So it's the same thing with home values, right? It's like, well, just going to wait until they come down, wait until it crash, or wait, you keep waiting around, you're going to miss the boat. You've already, you've already missed the opportunity. If you would have bought in 2019, you've already missed, $150,000 opportunity. So
and take it from a couple of guys who have regrets. Who didn't pull the trigger, So, I mean, it's not like it's like shaming people or anything like that. Like, at least from my point of view, it's
no, we've been in it. We've been in
Right.
it and we've seen it, or investment properties, whatever the case may be, not even just a primary residence, but an investment property. If you're looking to get into an investment property and then, you have $150,000 in equity in that investment property, well, then you can take out a quick home equity loan and put a down payment for another investment property, and then you're really building a portfolio of business wealth. So
Yep.
But it's taking advantage of the times and what's in front of you right now instead of trying to wait for the perfect time, because chances are that you're in the perfect time.
How do you know it's the good old days when you're in the good old days?
Isn't that true? Saw a clip earlier. A guy was like, I guarantee you, if I was to talk to you 30 years from now, you'd give me everything you own, every dollar in your bank account, every possession you have to go back 30 years and be where you are right now.
Yeah, it's
So
crazy.
true.
It's I mean, we've had this conversation many times, Al.
Mm-hmm.
Like, you get to high school and you're like, man, remember 7th grade? We were like coming of age. So great. And then you get
But in
to college.
7th grade, all we wanted to do was get to 8th grade.
Right. And
You
then
know?
you're in college and you're like, man, high school was so much easier, blah, blah, blah. And then you get out of college and you're sleeping on some couch and barely getting by, and you think, oh, the job market's so tough. And then you're like, I miss college. And then, then you get a wife and kids and you're like, what about golf? And then before you know it, you're fucking 60.
Yeah.
So I think the moral is just enjoy it.
Be where your feet are. Love that line. Be where your feet are. Be in the here and now. It's great. So yeah, buy a house right now, I think is what we're trying to say.
So to sum it all up, it's a great time to buy.
Buy now.
Or
Buy
sell.
and buy now.
Hey, or sell.
Or sell.
And
buy, sell. Whatever you, just don't stay where you are. Do something.
Yeah. Yep. Got to do something. Got to do something.
something.
I don't like anybody that's not doing nothing. I like people doing
I
something.
hate when people don't do something.
I don't like
when
care
people
what it
don't do
is.
something.
It could be toes for all I care. Be into something.
Just do something. Something.
You like sucking on toes. Okay, so what? It's something. You ever seen that
hell
Joey?
is that?
It's
No.
Joey Diaz.
Sounds like Joey Diaz. All right,
Joey
that makes a hell
Diaz.
of a lot more
It's
sense.
unbelievable. All right.
Yeah. So yeah, That's the show. I think we covered some good ground here. Got a little off the rails a little bit, but I think we reined ourselves back in. And then we drove the message home, which is buy. Just also sell. Do something, right? It's never gonna get any better. Hopefully rates come down. One thing we can say, values going up.
And so let's get out of these people's hair. This is That Mortgage Show. We're signing off. And remember, folks, if you're not doing something, you're not doing nothing. If you're not doing something, you're doing nothing.
Mm-hmm. Yeah, there it is. Nailed it that time. Second time's a charm. He's Adam. I've been Al.
Yeah.